Don Luskin is here. We have Mr. Luskin?
Mr. Luskin is here.
All right, Don Luskin. I don't think this stimulus package has any real growth elements. Actually, let me take that back. It's the dog that didn't bark. The reason I'm not excited about this story is that I think the only thing in the stimulus package is what's not in the stimulus package, which is a hike of marginal tax rates. We dodged that bullet. The rest of it, Don, I don't get it. Guys telling me all day today that the urgency of falling jobs to get a big stimulus package that drove up stocks, I don't believe it, but you tell me, what's your take?
I agree with you entirely, Larry. I don't think today's stock market rally had anything to do with this so-called stimulus package. As you say, the best thing you can say about it is it doesn't involve tax hikes. I guess if I absolutely had to make a case in favor of it, I'd say that maybe there's a chance that there's a kind of placebo effect. Maybe if we all believe really hard that by rubbing blue mud in our navels, it'll make the economy grow faster. So let's all rub blue mud in our navels, and maybe it'll make us feel so good it'll actually come true. That's about what this stimulus package is.
You know, Don Luskin, I just really love the market action today, and in fact this week. And in fact, I'm thinking about a real market turnaround now. We dodged the bullet. We've kept the low levels. We're way ahead of the November 20 bottoms. Let's put up on the full screen. We can look at the jobs numbers, the decline in the monthly jobs numbers, which may or may not be stabilizing at around 600,000. Now, we've been there for the last couple of months. Maybe they're going to hold at that 600,000 level if we can get that up on the full screen. That's jobs bottom. I guess that's not the chart I looked at originally, but okay, that'll show the story. Now, on the other hand, let's look at the M2 money supply. Let's put that up on there. The Fed has been expanding its balance sheet called the monetary base. That is the fuel, the raw fuel for bank deposits and money supply, and that has been skyrocketing. And the Baltic Dry Index, there's your M2 money supply. You're up almost $600 billion in roughly 5 months. That is a gigantic stimulus. And the Baltic Dry Index, which is a measure of global transportation of commodities, is also well off the bottom. Don Luskin, jobs may be yesterday's story. These are market and monetary indicators that suggest the future is better than the past. At least that's my reading. Stimulus package or not, what happens here? What do? Do you buy it? Do you go with this? Is it a turning point?
I think it is. I think what we've got here is we went through 6 or 9 months where it was like that scene in the movie The Shining. Remember that, where the elevator doors open up and just hundreds of gallons of blood pour out? Every day it was just a different horror show, and every month the market had to go down another 10% to make up for that. Now we're in a world where you get a horrible jobs number like this morning, and no one says, everyone says, fine, okay. Fine, we're there. We expected it. We finally discounted it. We finally got ahead of the bad news. So now you start seeing these little signs of life, these little mustard seeds, as you would say, like the little turn up of the Baltic Dry Index. And you start saying, aha, maybe we over-discounted for all this bad news. Maybe things have not only stopped going down, maybe they've started to turn around. And that's what this is about. Larry, for the first time in this bear market, in all the stock averages, we now have a notable bottom above a bottom. We, for the first time, have an incipient uptrend. This
After
could be
the
a new bull
January
market.
sell-off, we still dodged the bottom, basically, is what you're saying.
By really quite a margin, and we did it with bank stocks making new lows. So the worst part, the part that was supposed to drag everything else down, tried to, but couldn't.
You know what? Bring in for some quick, pithy little comments. Don Luskin, do you buy into what Mr. Lewis is saying? Because if you do, it's pretty bullish. Both Charlie and I agree. What do you think, buddy?
Well, yeah, it's easy for him to say now that nothing's going to go wrong. Basically, he just got another $20 billion from the federal government and a $118 billion loan guarantee from the Fed. The message he needs to go out there with is, hey, guys, I got my bank into a crash. I was wearing a seatbelt. The airbag deployed. It's going to be fine going forward. But let's not lie about how we got here. It was a crash.
All right, extremely patriotic. But our panel is split. Charlie says shareholders. Don says shareholders. Don Luskin, did I poll you on this real fast? Who was right and wrong here?
I'm afraid you didn't.
Who's right and wrong here?
Vince Farrell has it absolutely right. In order to serve shareholders, in this case, there was no choice but to also serve Caesar.
Also, sir, what is it? Render
unto Caesar what is Caesar's.
Thank you, Jerry.
And unto God what is God's.
I appreciate that. Vince